Sunday night on The Attorneys, we're talking taxes. Carter Clay from the firm of Hollis Wright. Not our favorite subject, but boys, we're going to cover some interesting and informative ground.
Yes, April 15th is right around the corner, and no matter how bad we wish it not to come, it's coming soon, and we need to be prepared, and we need to get our tax returns filed because it's inevitable, and we are very fortunate to have Brad Howell. He's going to be on the show with us Sunday evening. He's been on the show before. He always provides us a lot of useful tips and advice relative to taxation and answering those common tax questions and issues that arise almost every year. I'm looking forward to the show. Yeah,
very practical advice, always provided, you and Brad both. So looking forward to this show. So if you have tax questions, here's how you can get them into us. Call, text, email. Live attorneys will be standing by during the show on Sunday night. Some great questions. We'll look forward to seeing you on Sunday night.
Car crash cases, defective products, dangerous drugs, injuries, and abuse. Across the state of Alabama, the attorneys, proudly sponsored by the law firm of Hollis Wright, are here to serve you. Your tough legal questions answered by our experts. The Attorneys with Josh Wright from the law firm of Hollis Wright and host David Lamb.
Hello and welcome into The Attorneys. We appreciate you spending your Sunday evening with us. It's just about that time. You know, you can avoid a lot of things, but you cannot avoid death or taxes. We're not going to deal with death, but we are going to talk about taxes tonight on the show. So if you have a question you'd like to ask, we have a great panel to answer those questions, and we really make it easy for you to get in touch with us. Throughout the program, you'll see ways you can call, text, and email. Just get in touch with us. Live attorneys are standing by right now. At this very moment, you can speak with an actual live attorney. Just pick up that phone and give us a call. Leading our conversation, as he often does, Carter Clay from the firm of Hollis Wright. Good to see you, sir.
Good to see you, David. You hit the nail on the head. No matter how hard we wish that April 15th would not come, it comes. It comes every year.
Yeah.
And April 15th is the date that we have to get our tax returns filed. And it's very important that you get that done on time and or ask for an extension that we'll talk about later in the show. But given the amount of regulations that we have at the federal level, I read somewhere the other day that there's 70,000 pages worth of IRS regulations that are out there.
Goodness.
And because of that, the tax code is very complicated. I know that there has been a lot of conversation and dialogue over the last several years about simplifying the tax code, but simplifying 70,000 pages worth of regulations is not an easy task. Right. And fortunately, with us here this evening, he's been on the show before, Brad Howell. Thank you for coming back and visiting with us this evening. We always like to have Brad on the show close in time to when tax season or the tax date of April 15th hits, and so that's what we've done here. Thank you, Brad, for being here. Tell us a little bit about your practice and how you got into the area of practicing in tax law.
Sure. What we primarily do is tax debt resolution. So if an individual is undergoing an audit or they've already been assessed an amount owed, we can kind of assist them with negotiating an installment agreement or even challenging the debt that's owed. So while we're not involved with the preparation of returns, we can kind of follow up on the legal side and the negotiation side to assist them with resolving that tax debt.
And so for the viewers out there, I know the threshold question that is oftentimes asked first in these types of situations, and when we have a show on taxation, the first thought that goes through an individual's head is, okay, I made some money last year, I got a 1099 or I got a W-2, but I don't think I'm required to file a tax return. Explain to the viewers when you are required to file a tax return and when you might not have to.
Sure. What you really have to look at in that circumstance is the amount of income that was earned, what age you are or were during that tax year, and then what type of income was earned. So if you're earning Social Security benefits, generally those are not taxable. If you do earn more than $25,000 or $32,000, you would have to file a return, but again, that may not be taxable depending upon how the calculations go. But for individuals that file or that earn wages rather, or 1099 income, generally they are required if they earn more than $10,150 if they're filing individually and are under 65. Or if at the other end of that spectrum, if they are filing married jointly and they have more than $25,000 in income, that will trigger them having to file a federal return. Now the state numbers are a little bit lower, usually around ranging from $4,000 to $6,500 or so.
So it sounds like that analysis can be somewhat complicated and complex. I guess the easiest way to answer that question is to call a tax advisor or call an accountant if you have that type of question, because I guess it's better to be safe than sorry. and not conclude, hey, I don't have to file a tax return when in fact you should have filed one.
Definitely, and especially if you're self-employed or you receive multiple types of income, you want to get in contact with a tax attorney or an accountant, have them review that, because especially your Social Security benefits, as mentioned earlier, they are not taxable, but if you do have another source of income, if you are employed and you receive a certain amount for the year, your Social Security benefits can become taxable.
Yeah. Other than filing late and not asking for an extension, which I'm assuming would be one of the most common mistakes that people would make, what are some of the other common mistakes or oversights that individuals make relative to tax returns and tax season?
One of the things that we've noticed kind of in relation to getting that extension is that even if you obtain an extension to file your return, you still have to pay your taxes by April 15th. And so you have to kind of, if you don't have that return prepared, you have to kind of estimate what you're going to owe, make a payment, and then try to, cut back on, if you don't have it completely accurate, what the interest and penalties are going to be that accumulate on that amount owed.
Okay, well, that's a great point, something I didn't really appreciate. But if you don't file your tax return, you get an extension, you still have to pay the anticipated taxes.
Right, and depending on whether or not you're self-employed, you may actually have to withhold taxes on a quarterly basis prior to filing your return and paying that amount owed.
A question we have here from a viewer: when can the IRS or the Alabama Department of Revenue audit me?
That depends on the situation, but as a general rule of thumb, they have 3 years from the date that you filed a return to audit you. Or rather to enter an assessment. Now the audit process itself can kind of occur at any point in time because, as an example, if you have underreported your gross income by 25% or more, the IRS actually has 6 years to enter an assessment against you. So what they'll often do is come in and start performing an audit, try to get an idea of what's going on and what your income was that was reported or underreported, and then that will give them an idea as to when they can enter an assessment. But again, that 3 to 6 year statute of limitations, either of the two is what's going to apply.
And so just to help me kind of understand the process, if the IRS thinks that there's something suspicious about your taxes or your tax returns, they would first initiate an audit, which, as I understand it, is just an evaluation or analysis of your tax records. Is that right?
Correct. There are two separate things that they may do. If, for example, you didn't report income that they received or were notified of via 1099, they're aware of that after reviewing your return, and they may have enough information to make the changes themselves. But a lot of times, if they just have questions about things on your return, they may issue an audit and then ask for that documentation for you to clarify.
All right. But then out of the audit, if they find that you've underpaid, would come the assessment and they would tax you more?
Right. They would enter an assessment showing the additional tax that was owed, if there is anything additional owed. Sometimes audits, if you go through it, you submit the documentation and you actually are owed a refund. So it ultimately depends on the situation. But at that point, they do enter an assessment and you go through the process of being able to challenge it or negotiate a payment plan from that point.
Let's take our first break of the evening right there. We're going to step aside and take our first break. As we head to break, a reminder of how you can join the conversation. You can call, text, email. That information you'll see on your screen here in just a bit. But call, text, email, be a part of the conversation. Attorneys standing by right now live to speak with you. Also, you can find the firm of Hollis Wright on Facebook. Just search the term Hollis Wright, or on Twitter, it is Hollis_Wright. Stay tuned. More of the attorneys coming right up.
I'm Josh Wright with the law firm of Hollis Wright, and thanks for watching the attorneys on Alabama's 13. Now, we hope you, a friend, or a loved one never need legal counsel for a case. But if you do, the goal of this show is simple: provide answers and legal counsel when you need it the most. Your call to the show is free, so if you have questions specific to this show or related to other civil legal matters, call, email, or text us to talk with one of our lawyers. You can also follow us on Facebook or Twitter to learn about important legal news that could affect you or your family, or simply contact us by going to alabamas13.com and click on the attorneys link. Now, we know your time is valuable, so thank you for spending it with us and for watching the attorneys right here on Alabama's 13.
Welcome back to the Attorneys. We'd love to have you join the conversation tonight as we discuss taxes and tax law. Call, text, email. That information is displayed on the bottom of your screen all throughout tonight's program. Carter?
Brad, when we went to break, you mentioned the concept of getting a refund, I guess either at the state or federal level. But for those individuals that are out there that are contemplating not filing tax returns at either the state or federal level, if they are otherwise entitled to a refund based upon their income during a year and the taxes that were withheld, can they still get a refund even if they don't file tax returns?
They will not be able to collect that refund due to the fact that the refund is going to be dependent upon how many deductions you're claiming, how many dependents you're claiming. The IRS has no idea if you're going to itemize or use a standardized deduction. So in order for that refund to be calculated, you do have to file your return. If for whatever reason you fail to do so, you can still claim a refund for a previous year, but you must do it within 3 years of the due date of the return or 2 years from the payment of the tax, whichever was later.
Okay, sort of a statute of limitations on the taxpayer that says, look, if you don't claim a refund 1 year, we'll let you claim it in subsequent years, but not to exceed 3 years thereafter.
Right.
All right, a question we have here. Will the IRS or Department of Revenue take my house, car, or property?
They can. But the issue is will they? Because if you have been assessed an amount that's owed, the IRS has to go through a process before they can do any sort of collections.
Okay.
And that process includes sending out notices to remind you of the amount owed, and then eventually getting to a point where they send you a final notice indicating that they're going to collect. After that point in time, they can, although it is more common for them to levy bank accounts and garnish wages before they ever try to seize personal or real property.
So they're not just going to pop up out of nowhere with no advance warning, just
Usually
boom,
not.
they're there.
Right. Now, people do have some situations where if it's been years where they filed a tax return,
Right.
the IRS only has their last address that was on the last return. And so they may not be getting notices of what is owed, and so a bank account levy may come out of the blue for them. But technically, those notices have been going out, and so if you do keep your address updated with the IRS, you'll receive those notices and you'll know before they seize or collect.
What should an individual do if they realize after they have filed their tax returns that they made a mistake and that they didn't report income, or perhaps maybe they didn't take a deduction or a tax credit that they were entitled to? What should they do at that point?
At that point in time, they should file an amended tax return. And for individuals, it's a 1040X with the IRS, or with the state, it's a 40X. A lot of your business returns and withholding returns will actually have a box that you can check that just indicates that it is corrected or amended. But essentially, you would want to make sure that you go ahead and try to report those changes or updates as soon as possible. One exception to that is if you're already being audited by the IRS, just work with the auditor, submit documentation and information, and they can make those adjustments to your return most of the time without you having to file an amended return.
All right. Another question we have here. What should I do if someone else claimed my children as dependents?
We do see that as kind of a common scenario, and it's partially because of identity theft and then partially because of maybe a significant other or an ex-spouse just claiming the children when they're not supposed to. The best advice that we can generally give is that try to file your tax return as early as possible if you feel like there may be someone else out there who's going to incorrectly claim your children as dependents. Generally, the IRS does and state does accept the first return that is filed. And if you do run into a situation where someone else has filed before you, you're trying to electronically file and it's kicking your return back because those dependents have already been claimed, you'll need to mail in a paper return. And usually that paper return will take precedence over the electronic return that the other individual has filed where they've claimed those dependents.
Brad, talk a little bit for a minute about individuals perhaps being criminally prosecuted for, I guess, tax evasion or fraud on the government relative to taxes. We hear in the entertainment news periodically various celebrities that are oftentimes having assessments against them by the IRS and sometimes even involving jail time. Is that something that happens very often, and under what circumstances can somebody be criminally prosecuted?
Sure, it's not something that's typically common because, here in the United States, it's not constitutional to have a debtor's prison. So you can't go to jail simply for owing money and not paying it. But there are situations in which if they can show that you have evaded the payment of taxes, and that requires they prove intent. And in those instances, they can show and bring criminal charges if they can show your intent. And with a lot of these high-profile cases we're seeing, it's a combination of factors. One, that the IRS wants to kind of make an example of them to let people know that this is a possibility and that paying taxes is a serious responsibility. But it also is because a lot of these high-profile individuals have taken stances where they've come out and claimed, I don't think that paying taxes is constitutional, or I don't think it's legal. Therefore, they're giving the IRS clear intent to show that they didn't want to pay it. So.
Right. Ouch.
It's something to cover in a criminal law show about not.
Think before you speak.
That's
sometimes, huh? Should I form a business entity for tax purposes? Another question we've gotten.
Sure. For tax purposes, there are a variety of business entity structures you can choose, ranging from an LLC to an S corporation to a C corporation. And there are a variety of options therein that you can choose to elect a certain entity to be treated for tax purposes differently. So there are a variety of structures you can use to achieve optimal tax strategies. But ultimately, I would say it's generally sound advice to form a business entity, period, simply because it gives you legal liability protection.
Another question that goes right along with this about a business entity: can I be personally liable for taxes that my business entity has accrued?
Generally speaking, no, and that kind of goes back to the limited liability protection, where the business entity is a separate legal entity from you. And so if it accrues a debt, you're not personally responsible for it. But in some instances in which it is a tax that is held in trust for an individual, such as withholding from someone's wages or sales tax that is paid by a client, that business entity is holding on to those taxes in trust. And if they don't pay that over to the IRS, sometimes the individual owner of the business who is responsible for handling those business funds can be held personally responsible.
And Brad, we may have to go to a break in a minute, but I want you to talk to the viewers a little bit about some situations that you are confronting now in your practice on behalf of individuals or clients of yours that are involved in and mired in some type of tax liability issue, to, I guess, help everybody kind of understand what kind of representative clients you have in this area.
Sure. It's a variety. It ranges from a variety of different individuals and businesses that we represent, and the issues also, cover a variety of areas. The IRS has been dealing a lot with identity fraud and identity theft and people filing returns on behalf of other individuals. So we've been straightening that out, as well as just assisting businesses with a variety of debts as well as individual debts. So.
All right. Another question we have here, some good questions coming in. I've received a notice from the IRS stating that I owe them money. Do I have to pay it all back at once?
You do not have to pay it all back at once. You'll receive a lot of notices from the IRS that say, here's the tax year that you owe for, here's the balance that is owed, please pay by this date. And while those notices are important and you should take notice of them, those letters merely indicate that they have calculated interest and penalties out to that date, and that if you pay it by that date, you'll be done. But you can set up an installment agreement and pay off those balances over time.
And real quickly, one that's similar to that, can I settle my tax debt for less than I owe?
You can. Not with the state of Alabama. Some other states, such as Georgia, do offer it, but the IRS offers a program called an offer in compromise. And you hear about this on a lot of national radio and television advertisements. Some of those companies know what they do and some don't. And it's one of those things where you have to really qualify for the offer in compromise. So if you get contacted by a company and they're making a guarantee that they can settle your tax debt and they haven't even talked to you about your financial situation, they probably don't know what they're doing, or they're trying to rip you off, essentially.
Well, an offer in compromise with the taxpayer on this, I would think you'd have to have some pretty strict criteria in place, because who wouldn't challenge it if they thought that ultimately they could get it compromised at a lower rate?
No doubt, yeah, no doubt. And boy, we do hear those commercials. They're pretty hot, and we'll probably get even more commonplace as we head closer to April 15th. Hey, time for us to take our second and final break of the evening. As we do so, a reminder of how you can speak with a live attorney right now. Call, text, email, get in touch with the attorneys of Hollis Wright. They would love to speak with you. Stay tuned. The final segment of the attorneys coming right up.
I'm Tyler Vale with the law firm of Hollis Wright. As with any industry, it's important in the legal world to hire an attorney that is knowledgeable and has a track record of success. But with so many attorneys out there and so many different types of cases, how does someone decide the right lawyer to hire? In this week's Legal 411, we're answering the question, what should I consider in hiring an attorney? In-state versus out-of-state, big firm or little firm, recommendations from friends or family, the internet, the phone book, or TV. With so many choices and so much information, It can be an overwhelming task trying to make the right decision. To complicate things, choosing a lawyer is an important and sometimes life-affecting decision and should not be taken lightly. So how do you select an attorney? Do your research. Look the firm up on the internet. Ask friends and family whether they know or have any experience with a specific firm. If you know any local lawyers, ask them about the reputation of the firms you may be considering. Call a local law office and ask if they are handling cases like yours. There's a good chance they can help you. But if they can't, they can always refer you to someone they respect who handles your type of case. And remember, ask questions face to face. Ask about their experience in handling cases like yours. How often someone from their office will be available to you, and what you can expect during the process. Please remember, your call, email, or text to the attorneys is free. All of us at Hollis Wright want to help answer your questions on real issues you face. Remember, a competent lawyer will respond to every question you send in. That's our pledge and promise to you. Thanks for watching The Attorneys on Alabama's 13.
Taxman is coming. We are trying to make sure that you are ready for that. Welcome back into the attorneys. The final segment here. So if you have a question you want us to pass along to our panel of experts, get that on into our live attorneys standing by. That information at the bottom of the screen. Carter?
Yeah, Brad, several years ago when my children were young and were in daycare, I remember every year my wife and I would kind of evaluate whether or not the expenses or payments for child care or daycare services was deductible under our tax code. What is the current status on taking deductions for child or dependent care?
One thing to note is that here in Alabama, at a state level, they do not allow the deduction of child care expenses, nor do they have any sort of credit for that. But at a federal level, they do have a child care credit. Now, what that amount of the credit is going to be and how much it's going to offset your tax is dependent upon the number of children you have, as well as your income and the amount of expenses you have. Generally speaking, that can max out at $3,000 for one child or $6,000 for more than 2 or more children.
And just to deviate for a second to make sure we're explaining all of the kind of terms that we're talking about here tonight, but what is the difference between a tax deduction and a tax credit? How does it apply to individual situations, and which is better?
Sure. A deduction is essentially something that has been identified by the IRS estate as an expense that you have paid and that you can actually deduct from your income. So that when you have your gross income, you deduct certain expenses and that gives you your taxable income. Now, credit, on the other hand, is not necessarily an amount that you've spent, but it could be something that's calculated based upon what you've spent. So as an example, for the child care expenses, you may get a credit of $3,000, but that doesn't mean that you spent $3,000 in child care expenses. It's just how that credit was calculated. Ultimately, neither of them are more beneficial than the other, as both do reduce your tax burden. However, there are refundable credits that can go beyond just reducing your tax burden and can actually give you a refund.
Yeah, I've heard that there are situations where a tax credit might apply, that after the formula is run and the formula says you owe $10,000 in taxes, if you have tax credits, you can actually get a dollar for dollar benefit to reduce your taxes. Is that right?
Correct. And depending upon whether or not the credit is refundable, let's just say that your taxable income is at $500 after you've taken other expenses, and you have a refundable credit of $1,000. That's going to take your taxable income down to zero and then give you another $500 credit that's going to be paid to you, whereas a non-refundable credit is only just going to reduce your taxable income down to zero, and you're not going to get the excess of over that amount.
Now that's the result I'm looking for on April 15th.
Definitely.
That's the answer you
Reducing it
want.
down to zero and getting a refund.
It's a win. Yeah. Hey, a question we've got here. Can I deduct my student loan interest?
You can on a federal level. Again, here in the state of Alabama, they don't allow you to deduct that on your return. Now, on the federal level, you can deduct up to $2,500. And that maximum is also dependent upon your income. So if you earn a relatively high amount of income, you may actually, as the calculation works out, be able to only deduct less than $2,500, maybe $1,200, just depending upon how that calculates.
What if I receive a tax refund on the state level for last year, or at the federal level, can those refunds be considered income the following year on the state and or federal level?
They generally aren't. The only exception to that is if you have a state tax refund, it can be taxable income to you at the federal level the next year if during that tax year that you received that refund, you itemized your deductions on your federal return. One of the itemized deductions that you have to actually be claiming is state or local taxes that you paid. So if both of those requirements are met or those factors are met, then that would be reportable income to you. And generally in that instance, the state is going to send you a 1099-G to let you know that you received income that is reportable.
Okay, a couple other questions we have here. I disagree with the amount that the government claims I owe. What can I do?
It depends upon where you're at in their process. Kind of as mentioned earlier, they're going to send out multiple notices to you to say, hey, this is the amount owed. One of the initial notices they're going to send out to you is going to say, here's what we've changed it to, here are your appeal rights. And generally you do have the right to request an audit reconsideration or to have an appeals officer within the IRS or within the Department of Revenue review your case. So you have a lot of options there to challenge the amount owed without having to take it externally to a court.
The stories that I have heard in those situations, almost to a person, it seems like that process takes a very long time to get resolved, especially if you're withholding payments in the following years based on your contention that they owed you a refund. And I've seen these things draw out for years and years.
They can, and a lot of it is really dependent upon the IRS and State Department of Revenue and what their workload is like. You have to keep in mind that they're dealing with millions of taxpayers and thousands of taxpayers at the state level, and so they're trying to work through this entire process and get all this documentation. So it can take months, and usually when you're working with the IRS, the minimum they give you is 60 to 90 days before you can really anticipate a response from them. So
less than 3 minutes remaining, but want to get this one in. I haven't filed a return in several years. What should I do?
The ideal thing to do is file it as soon as possible.
Right.
And of course, if you're worried about whether or not you're going to owe and you don't want to trigger that process of having to pay, while that's understandable, the longer you go without filing, the more penalties and interest that are going to accrue. And especially because they do have a late filing penalty. So you want to try to get those returns filed as soon as possible, get the amount nailed down that you owe, and start working toward a resolution.
Now back to what we talked about earlier though with respect to the assessment, is there a statute of limitations, so to speak, on how far back they can go in time to collect on that?
Sure. From the time that the IRS or state issues an assessment and says this is what you owe, they have 10 years to collect that. Now there are a variety of things that can extend that statute of limitations. For example, if you file a bankruptcy proceeding and it takes maybe a year to discharge, that's going to add on a year to that statute of limitations. But generally the IRS and state, they have 10 years to collect.
We're just about out of time. Just time enough for a final thought from the both of you, and you go first, please, sir.
Sure. I think one of the things that we try to stress to our clients is stay on top of things. Make sure that your address is updated with the IRS. Make sure you're opening mail. A lot of individuals think if they just don't open certified mail, it's never legally serviced to them. But just go ahead and make sure you're on top of things and stay in correspondence with the IRS. If you don't contact them, they're going to move forward with assessment and seizure proceedings, so make sure you're working with them and getting information to them.
Yeah, and I would just echo some of those sentiments. Don't procrastinate, don't wait till the last minute to start preparing the tax returns, and I think organization is the key. Get all the documents that concern the salary, the income that you had, but also look out in the mail, because in January and February, charitable organizations that you've donated to, perhaps you have brokerage accounts that are opened up, you're going to be getting mail daily or weekly that are going to provide you information that you can pass on to your tax advisor in terms of deductions and tax credits that might be available to you. And I would also say that the best money I ever spend every year is getting somebody else to do my taxes, because normally they will find refunds that I wouldn't have otherwise gotten.
Yeah, well, great advice tonight. Appreciate you guys being with us, and you all as well as we wrap things up. Here's how you can get in touch with the firm of Howell Wright. We appreciate the time, and we'll look forward to seeing you next week right here on The Attorneys.
Thanks for watching The Attorneys, sponsored by the law firm of Howell Wright.